Hello, I'm Andrew Buza, Director of Financial Planning at RWA. Welcome to another episode of The Human Side of Wealth. Here we explore life decisions, values, and goals that shape your financial journey, helping you plan for success in a way that truly reflects what matters most to you. Joining me today, I have Steve Reeder, President of Private Wealth, and Josh Jones, a Senior Wealth Advisor. And together, we'll walk through 5 key areas to help you start the year strong with a clear financial roadmap. Guys, welcome. Excited to have you.
Andrew, great to be here. Great to be here, Andrew.
Yeah, thanks, Andrew. Happy to be here again.
So Josh, we were just saying it's been a while since we've done an episode together, but good to have you back. Steve, we've done a few of these, so we're seasoned pros. But Josh, good to have you along for the ride.
Hey, thanks for letting a rookie into the mix here. I appreciate it, guys.
So just to set up today's episode a little bit more, we're recording this here in January. We know the new year. It's usually a time for resolutions, but let's be honest, resolutions often do fade, sometimes by February, if you go to the gym parking lot. But listen, instead of talking about resolutions, let's hit something more powerful, planning for your goals. But here's the thing, about goals, and this is what we were talking about as we're preparing today's episode. It's not always easy to know what your goals even are. Life is busy, priorities can shift, and sometimes we're so focused on the day to day that we don't stop to ask what really matters to me.
Well, Andrew, I think it all starts with a good partner or advisor. They can come in and be really handy in a case like this. And I think it all starts with a conversation, because in that conversation, it's about helping the families that we take care of uncover what's most important to them, and then building a plan to assist them in getting there. And these goals can be very simple. We don't have to overwhelm ourselves or make them overly complex. It can be something like an income you don't outlive in retirement, or a hand in the education of your grandchildren, or significant legacies to the people that you love and will eventually leave behind in the world. But I think it all begins with that conversation.
For sure. A conversation with a good advisor can help spur on that thought process of figuring out goals. But before we do get into the nuts and bolts, Steve, I want to start with a big picture question to you. Why do you think it's so important to start with goals? There's sometimes a temptation to jump straight into investments or taxes or insurance, but what in your mind makes goals the foundation?
Yeah, absolutely. And you see this with clients' decisions sometimes, where they come in looking for a solution to something specific. And while I want to make sure we address that, we have to really understand, where are they trying to go? Because that does impact the outcome. I mean, you think about the GPS scenario, like how do you know where you're going if you don't kind of plug in the end in sight? And so the goals are going to be really important to get there. And I often talk about our 4 pillars of financial planning, investment management, tax planning, and estate planning. And estate planning is kind of like that end game. But regardless of what your need is anywhere along the way, it's really difficult to give you a great and the right outcome without understanding first, like, where are we trying to go? What are the goals we're trying to accomplish? Who are the people that are important to you? What are the things you want to support? And so understanding those goals is just crucial to giving great information.
I love the GPS analogy. It's one of my go-tos. I would personally be lost without one. The end destination and also location services to know where you're starting, right? To be able to figure out where you are today. So that's part of the conversation. And Josh, you've worked with families for over 20 years. Can you believe it?
I can't. Time flies when we're having fun, Andrew.
So when someone says to you, I know you kind of touched on this before, but when someone says to you, I don't even know where to start, which I'm sure you hear all the time, how do you help them figure out, how does that conversation start to unfold?
Well, first off, it's so normal when we sit down with a family and begin helping them. It's very normal for them to ask the question. I don't even know where to start.
Yeah.
And this is going to sound overly simplistic, but it starts with a conversation, us asking lots of questions and listening to help them figure out exactly what their goals are. I mean, let me give you a really quick example. This is a family we just recently started helping. They're in their early 60s. They're thinking of retiring or at least working less. They're about to switch from savings to spending. They're wondering if
Mm-hmm.
they should keep their second home or sell it. They have two children, one of which is really in need of some financial help. Um, they're 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 wondering if they should assist them in buying a home. The couple's curious when they should take Social Security. They want to know what health care coverage is going to look like in retirement. Um, so where am I going with all this? In the conversation, we begin to understand what their needs are. And then from there, we can begin to formulate goals and then begin the process of putting together a plan. But it all starts with us asking questions and listening to help them uncover what's most important to them now and how we need to help them get from where they are to where they need to be.
And that example, they've got a lot of priorities that are shifting, right? I'm sure that you're helping them work through. Um, so that's a good example for sure. And I know
Well,
you,
you're
yeah.
you, I mean, you're right. In many cases, there are a lot of things going on, but we're trying to meet the family where they are and where they need help
Mm,
more immediately.
yeah.
And then some of the other less um, priority needs we can take care of further down the road.
Hmm.
Um, but there oftentimes is a lot that people need help with, and we just got to tackle it in a manner that's reasonable and makes sense to them.
I like that now, next, and later framework sometimes too for that to help figure out those priorities. So, all right, that's a really good lead in. So let's get specific then. You know, if we dive into five important areas to help you, the listener, start the year strong, align your financial life with what really matters most. So, Steve, I'll start with you. What do you feel like is the first area that families should be thinking about talking about?
Yeah, absolutely. And as I mentioned earlier, it's really like clarifying those goals, getting clear on what
Mm-hmm.
you are trying to accomplish. What does success look like for you? I mean, most everyone that is working has a goal of retirement. You know, there are some
Mm-hmm.
people that don't, but they oftentimes you'll see people look at retirement. But it kind of ends there for many people. And so the reality is what does retirement look like for you? And that can be very different from one person to the next. And so we want to make sure we help clarify what retirement looks like. And then I think also one of the things that we do as advisors that's really important is we take some of those less tangible things, like say, I want to retire, and we help them figure out what it looks like, but we also can start to quantify that. So as we talk through their goals of retirement, they may talk about travel. They may have some bucket list they want to check off, and we can start assigning goals to that. And when we start to
Mm-hmm.
tie that in on more of a quantitative basis into their financial plan, it helps us understand, is this something that's viable that they potentially can see as an outcome and have a successful retirement, not run out of money? And so, like, that transition from somewhat intangible, this is what I'd like my life to look like, to us piecing it into something more tangible and helping them understand if this is something reasonable or if we may need to make some tweaks to it is really a big step that I think also helps people get a lot more comfortable that they can pull the trigger. You know, oftentimes people want to retire, but they're afraid they don't have enough. But without quantifying some of these intangible goals, it's really hard for them to see the big picture. So having that outside partner to help you through that, I think, is really important. And then it's also good to have an accountability partner for some of these goals, because someone may
Mm-hmm.
say, I want to retire in 5 years, but they then don't do a whole lot different for 4 years and then poke their head up and like, okay, I'm retiring next year, but they haven't thought about it. So having someone go on that journey with you for those longer term goals, I think really adds a lot of value.
The accountability partner aspect of that is huge, right? Because these some of these are very long term goals, right? Years and years away. Um, need some check in, need some care over time. So I think, yeah, clarifying your goals as a first step, so important. I would even say take out a piece of paper, maybe a pencil or pen, if we all remember what that is. Maybe write them down. That might make it feel a little bit more tangible. I think there's some power to that. Maybe just amongst yourselves, as a family, could be a good first step to take there. And obviously with a partner, Josh, as you were mentioning, and Steve as part of that conversation with an advisor, helping to really clarify, get down to quantitative. Okay, how does this actually work out? From a cash flow perspective, which takes us into number two. So once that priorities start to take shape, that next question often becomes, so we've got our big picture. How do we start to make day-to-day decisions to line up with those bigger goals? So we talk about cash flow planning with clients here, Josh, right?
Yeah, we do. And you said something, Andrew, that stuck with me, and that is, the goal has to be something that's concrete.
Mm,
And let me give you a perfect example. We help a lot of families that need to set specific, what we call dollar and time goals. What do you
hmm
want to what do you want to do? When do you want to do it? And how much is it going to cost?
Yeah,
And uh, a cottage on the beach someday, that's not a goal. It needs to
yeah.
be, to your point, more concrete than that, something a little more tangible. So, it could be a retirement income of $100,000 a year above and beyond Social Security, starting at age 65, and then rising consistently over time to keep up with the rising cost of living. So that's a concrete, specific goal that I think sits up and barks a little bit. Um,
hmm
and 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 then from there, we can help them fill in the gap, so to speak, to make sure that that goal becomes a reality that we can now specifically plan for.
Yeah, starting with the end in mind a little bit, right? Of okay, here's what you need uh to buy that cottage. Maybe here's when it's going to happen. How much do you need to start saving, on a monthly, annual basis to start to stack up some wins?
Exactly. And then on the other side, there are a lot of families we help that are in retirement or thinking of retiring, and they've never done, I'm going to use the dreaded word, a budget.
Oh
And
boy,
and
it's
and
out
they,
there. You said it.
forgive me, and they don't know what they're spending, because a lot of
Yeah.
us may have never done a budget, and that's okay. Because if you're working and you're saving and you're setting aside money, that's a win in and of itself. But at some point, when you're getting ready to retire, it is important to have a feel for what your monthly expenses are. Because if you really love to travel, or you want to help your grandchildren or your children, you need to know what you have for assets, what are your sources of income, and what sort of withdrawals you may need to make from your investments.
hmm There's a psychological switch that happens when you switch from the accumulation working years to now I need to walk back down this mountain.
And that's a hard switch to flip for a lot of
hmm
folks. And a lot of the help that we provide is that transition, because you're so
hmm
accustomed. We are so accustomed to save, 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 that when it comes time to start living off your investments, yeah, that can be a tough transition.
Yeah. Okay, so we've clarified our goals. We know what they are. We have some sort of a cash flow plan that can take some time, right? And it not doesn't always happen in one meeting. but we do want to accomplish that for sure. Whether you're in retirement or you're working, but then there's other things to think about here, right? There's curveballs that life will throw. So, Steve, another area that we work with families on here is helping them manage that risk management. Not always the most exciting topic, but I think you can make it exciting. That's
Yeah, it isn't always the most exciting, and sometimes, people don't want to face some of these realities of
yeah.
what could happen. And risk is a huge part of what we want to make sure we pay attention to. People spend their whole life saving for hopes and dreams and goals and families and everything else that they want to do, and a lot of things can change that. I'm actually on the board for a nonprofit that helps support women living with breast cancer. And one of the things we talk about is so many people are one diagnosis away from their whole life turning upside down. It's
Mm,
not something you can really prepare for necessarily in a lot of ways, but when we think about risk, it doesn't have to be that dramatic of a health issue, but even, lots of health issues can come about, job changes, something with market volatility. There's a lot of things outside your control, and we can help support a plan that is going to at least protect against some of those moving pieces. And I just think it's really important, as you spend so much time and so many years working and saving and doing the right things, that you're really thoughtful about protecting against what your hopes and dreams are, and that you can continue to live that life. And there's just so many ways we can go about a plan around protecting, but it has to be intentional, has to be a conversation. Most people will not have this conversation by themselves. They may not put the right things in place. I know I come across a lot of people that will kind of look at, we'll do that next year, we'll do that next year, we'll do that
yeah.
next year. And again, that's where it comes down to making sure you have a process in place, some accountability for what we're doing, but just maybe someone who's seen a lot of things happen, as a lot of our advisors have worked with so many clients, that maybe we're going to see around a corner that a client working on their own may not really be thinking of. And I just think it's so important to protect against that, so that you can live that life you're looking for and that you've worked so hard for.
You know, Planning for that cottage on the beach is more exciting maybe than wondering if you have enough disability insurance, right? But boy, is that important if you ever need it, right? And if the goals that we plan for, that can crumble pretty fast if
Yeah,
once those risks pop up.
absolutely. And not to get too in the weeds on this, but I think one of the biggest risks that I think about most right now is we've seen a market that has done very well. And
Mm,
a typical client was trying to avoid paying taxes, which, I agree, and there's a lot of plans. But what that can turn into is someone continuing to hold something that maybe it's no longer right for them to avoid the taxes. And I
mm,
have seen that time and time again in my career, where, the risk of having the wrong asset allocation in your portfolio could be one of those risks that's looming, that people just aren't paying enough attention to. And I do see a lot of it today, where we're seeing individuals make the decision to avoid paying tax, but they're
mm.
doing it at with the risk of having the portfolio that maybe is not right for them as they get closer to retirement, as they maybe have saved enough for their goals already. A question I like to ask is, why are we taking all this risk? What is the goal that you're still trying to achieve, that we're continuing to take all this risk? And I think that is a big one that a lot of people should think about as they look at their portfolio, is, are we holding on to some of these things that we're holding on to, and maybe for the wrong reason?
Well, that's a good segue to get into portfolio talk for a minute here, right? So we've kind of gone through, we've done some clarification on goals, we've got cash flow, talked about managing risk here a little bit. A next natural question is, well, how do my investments fit into this, right? How does that engine kind of behind the scenes help me achieve my goals? That's a question that we would hear. So, Josh, how do you make sure that a portfolio that you're building for a client stays connected to those goals instead of just becoming, here's how it did, against the S&P or some other index?
Well, that's where the goals come in and why they're so darn important. when figuring out how to invest the money. I mean, as we
Mm,
always like to say, we can't invest a dime of anybody's money until we know what the goals are and what the purpose of the money is. And the reason we think it's so important to understand the purpose or have a why is because it helps you stay the course, so to speak, during the regular inevitable periods when the seas get very stormy. And that happens constantly. In the more than 25 years I've been in this profession, you could argue that one of the biggest ways in which we help families with their investments is making sure they stick to the long-term plan that we put in place in the first place. Because it can be
mm,
very easy to put that plan together, but when the news gets a little wacky
yeah.
and things get a little exciting, it can get very easy to become distracted. And so I think investing with a purpose and having those goals, writing them down, having the plan allows us to stay that course, which is critical to the long-term financial success that we look to help all the families we work with.
You need a why, for what that portfolio is doing for you, and asset allocation, right? That it starts with that ultimately. I mean, Steve, we were talking earlier this morning. There's been a year's worth of headlines in the first few weeks of the year here, right?
Absolutely.
But that asset allocation helps keep you grounded for why it was selected in the first place.
Well, and I'll add to that, Andrew, not only the asset allocation, how much in cash versus how much in
Mm,
bonds versus how much in stocks, but from there, staying disciplined,
yes.
staying patient, and staying diversified. One of perhaps the most overused words in our profession, but so important. And it's why we're regularly in communication with all the families we help, so that we can help them stay disciplined, patient, and diversified. Because a plan, wasn't it Mike Tyson that said we all have
Yeah.
plans until we get punched in the face?
Right.
And we're regularly getting punched in the face, and we want to make sure people stick to the plan.
Yeah, and Josh, I think to your point earlier, like when I think about investing, and one of the pitfalls I see is, sometimes people set up a portfolio for the wrong reason. And so, you see and you'll read articles about like if you're 70 years old, you should have 70% in fixed income and 30% in
Hmm.
equity, or something along those lines. And the reality is they're not asking the question that needs to be asked, which is, what is this money for? If
Yeah.
you're investing with every intention of transitioning to a different generation, this assets, maybe it can take a much higher risk profile. But it's
Hmm.
that missing that why, like, what is this money for? Why are we investing this particular set of investments? And without that question and understanding the goal that the client has for that money, you're getting to the wrong answer.
Great
Yeah,
point.
that's
Yeah.
great example for sure. Time horizon, purpose, it all needs to be discussed. Um, and we can't get there without the goals, right? To go back to the beginning of our conversation. But let's round this up with number five. Steve, you mentioned this a little bit earlier, but taxes. So, right, we've talked about goals, cash flow, a little bit about insurance and investing. Taxes, I'm going to say, I'm going to make a claim here. I think it's often overlooked. And Steve, this is where I think the connection to goals is actually pretty powerful,
Mhm.
because it's so much more than just making sure that you file on time, right? It actually has a really big impact on how quickly you could reach your goals.
Absolutely. The way I think about it is a few things here. So one, I think about like investment strategy. When we talk about kind of the four pillars, like a couple of them here, the investment strategy is how I think about we're growing your investments, your finances, your wealth. That's how we're looking at growing it. But I think how we manage your wealth is through tax planning. And you had
Hmm.
mentioned tax prep. I think there's a really big distinction between tax prep and tax planning. When I think about tax prep, it's kind of something we have to do. It
Hmm.
is, if I can, without offending all my CPA friends out there, it's much more of a commodity, I think, of what we do. Like everyone has to kind of do it. And I think people focus on it because they pay extra to get their taxes done. But when I think about the major impact and the amount of dollar impact good tax planning can have, it's where people really should be focusing when we think about taxes. And to your point, when you think about all the different parts of your life it touches, taxes are typically someone's biggest expense they'll ever pay in their life. They're going to pay more
Hmm.
in their life for taxes than they will for a house, for a car, like for any other of these things they may buy that are big purchases in someone's life. Most people are going to pay more taxes than anything else. And so when you think about it from that lens, what are the strategies we can do to help minimize that as much as possible? And so there are just so many ways, especially for charitable giving, generational transfer of assets, just being smart about what we're doing. Are we doing estate planning? Do we have trusts in place where it makes sense? So, I mean, they all kind of come together, but it all gets tied up in a great tax strategy and the tax planning. If you are not integrating tax planning into your investment strategies and everything that you're doing, I really think you're missing. I think so much of our industry gets talked about the investment side, and that's where you do see the growth. But I'm telling you, the people manage their wealth through great tax planning.
It's the biggest lever that often doesn't get pulled, right? And to your point on, yes, you need to file your taxes. Tax planning is optional, right? And if we
Mhm.
see someone's recent tax returns and they're excited because, hey, look, I didn't pay anything in taxes last year or the year before that, that might not be a good thing, right? Those could have been opportunities to
Yeah.
accelerate income into those lower years, with the bigger picture of lowering your lifetime tax bill and like you said, lowering that biggest expense you're ever going to pay in your life. But there's this temptation to say, hey, look, I paid 0% in taxes last year. This is great. When those are really the huge planning opportunities that we like to take advantage of. And Josh, you do a lot of work on, with families on this. I know specifically. How do you help them to see that taxes are, it's not just about something you need to deal with, once a year in April?
Well, just had a conversation, Andrew, this morning with a family we've helped for years, and it was regarding withdrawal strategies. And it's
Mm,
what you were just talking about. This is a couple that is maybe 5 years away from the required minimum distribution. They've recently stopped working, so they're temporarily here for a few years in a lower tax bracket. And when we were talking about best places to begin drawing on their money, um, and and we looked closely at their tax return, it became very clear that we should begin making withdrawals from retirement accounts, taking advantage of very low tax brackets for a few years, so that when they are forced to start taking money out in another, call it 5 years, we can essentially spread out that tax liability and take
hmm.
advantage of lower years. And we're also in that conversation talking about changing how they give to charity. This couple loves to give to a couple of charities every year, and they're just a few years away from being able to use their IRA to begin giving money that way than what we've been doing up to this point in time. So
Hmm.
a lot of little things, at least that seem little, that can have a huge tax savings impact and let that money continue to grow eventually for the next generation so they have more to use when that time eventually comes.
We often hear so much. A goal of mine is to decrease how much I'm paying in taxes, right? But there's more to that than just 1 year, right? We need to look at your whole lifespan and figure out what makes the most sense strategically from a tax planning standpoint. So I think that's a great example.
And not only is it your
Yeah.
lifetime, Andrew, it's
Ooh,
it's
yes.
oftentimes, right, the next generation's lifetime, and
Yep.
what sort of tax brackets are they in, and what
Hmm.
does their income or future income look like? So it's a wonderful opportunity as well to bring the next generation into these discussions to get them more involved.
I'm so glad you said that because I would have been kicking myself listening to this back if I missed that one. So thank you.
Hey, we'll be kicking ourselves anyway after listening to this
Yeah.
back.
I knew it was a good idea to have you on this episode.
Uh,
All right, let's get to the conclusion. So we talked about 5 areas: goal planning, not resolutions. Resolutions fade. Goals are here to stay over the long term. So we talked about, first of all, clarifying them, right? Write them down, work with an advisor to help figure out what those are. Cash flow planning for more of that the day to day, month to month planning, managing risk that involves both portfolio and insurance, investing with a purpose, and then finally tax planning, which is going to touch all of these areas and help you get there faster, get to your goals faster. Guys, anything that you would leave the listeners with before we wrap up today?
I'd say a couple of quick things, Andrew. Number one, make sure you're getting really good help from
Mm-hmm.
someone or some organization that you trust, you respect, you like. Keep it simple as you're trying to figure things out. Human beings have this uncanny ability to try and complicate the heck out of everything.
Mm-hmm.
Keep it simple, ask questions, make sure that you understand what you're getting involved in or with. And again, just make sure you're getting good help from someone you like, you trust, and you respect.
Yeah, and I think for me, two things. One is I think so many people get frozen because they're not sure where to start. And that's okay. A lot of people feel that way. I just think the real important thing is getting started. So you need to start somewhere. And then my other thing I like to say is it's never too late to start. So I think that getting
Mm-hmm.
started is just so important. Make sure you take that first step. The second thing is I have found working with a lot of couples that they're not having these conversations at home. And so when
Mm-hmm.
I'm in a meeting and we're going over goals, you start to identify in some of these meetings that the goals aren't aligned. So
Mm-hmm.
if you have a spouse, a partner, a family member, someone that you want to have part of these plans, make sure you're open to that conversation. And I do think an advisor as a third party is often a good person to lead some of those conversations. So it doesn't feel maybe as personal. But so many times I hear one spouse say to the other, I never knew you felt that way. And I
Mm-hmm.
think it's a shame that we don't have more of these deeper conversations at home. But I think people avoid the financial conversations. And so getting started, communicating, having this conversation, it's never too late to start that conversation.
That's a great place to leave it. This has been Andrew Booza, Josh Jones, and Steve Reeder at RWA Wealth Partners. Thank you for sharing this time together. Hope you got something out of it. We will see you on the next episode of The Human Side of Wealth.